Hey everyone, Duane Buziak here, your Mortgage Maestro serving Virginia, Tennessee, Florida, and Georgia. Today I'm breaking down something every homeowner asks me. Should I use a HELOC or do a refinance? Both can unlock your home's equity, but the right choice depends on your goals. So in this video, we'll explore two real homeowner stories and wrap up with a quick look at the 2026 housing market forecast to help you plan ahead. Let's start with case study one, the Renovator. Sarah and David from Richmond, Virginia bought their home in 2020 with a 3.25% fixed rate. Fast forward to now, their home value has climbed, giving them over $180,000 in equity. They wanted about $70,000 for a kitchen remodel and energy-efficient upgrades, but they didn't want to lose that great low mortgage rate, and that's where a HELOC, or home equity line of credit, became the perfect fit. We set them up with a digital HELOC, a flexible credit line that lets them draw money as needed and pay interest only on what they use. Their main mortgage stayed untouched, and they kept that 3.25% rate locked in. They're renovating their dream kitchen while keeping monthly payments manageable. That's the beauty of a HELOC. Flexibility and control without replacing your current mortgage. Now let's look at case study two, the Rebalancer. Kevin from Jacksonville, Florida, bought his home in 2019 at a 4.75% rate. Over the years, he built up some credit card and personal loan debt. His home value went up to $420,000, but his monthly payments were tight. For Kevin, a cash-out refinance made more sense. We refinanced his full mortgage, rolled in about $50,000 of high-interest debt, and locked in a new fixed rate around 6%. Sure, the rate was higher, but his total monthly payments dropped by nearly $900. He simplified his finances, improved cash flow, and started saving again. That's the refinance advantage, structure and long-term stability. So how do you know what's best for you? Here are three key questions I always ask clients. 1. What's your current rate? If it's lower than today's market, a HELOC usually makes more sense. 2. Do you need flexibility or a lump sum? A HELOC gives you access over time. A refinance gives you one large payout. 3. Are you tackling debt or funding a project? If you're consolidating, refinance. If you're improving or investing, HELOC. Simple framework, smart decisions. Now let's zoom out for a moment and talk about what's coming in 2026. Most analysts predict the Federal Reserve will begin moderate rate cuts by mid-2026 as inflation continues to cool. That could bring mortgage rates into the mid-fives for qualified borrowers. If that happens, homeowners with HELOCs may see variable rates ease lower, and refinance clients could soon have an opportunity to refi again at a better rate. In other words, both paths can win, depending on your timing and goals. The key is to make decisions strategically, not emotionally. Your home's equity is one of your most powerful financial tools, but only when you use it with intention and guidance. At Coast to Coast Mortgage, we're proud to have surpassed $1 billion in loan volume this past August. And that success comes down to one thing: trust, real clients, real conversations, real results. So if you're thinking about using your home's equity, or want to run numbers to see which path fits you best, let's connect.